Hello and welcome to this video on business failure. Every year in the UK, a number of businesses fail and a number of new businesses come into existence. This chart below us shows the rate of business births and business deaths between 2004 and 2013. First of all, if we look at the death rate or businesses failing, it's around about 10%, with a rise in 2009 with the recession, but generally speaking about 10% of businesses every year fail. The blue line shows us the number of new businesses that are born every year or started every year compared to the number of businesses there are. So this is slightly higher. So over time we have slightly more businesses being born than we have failing. If we look for small businesses and look at their rate of survival, well, after 2 years, 7 out of 10 new businesses that have been started are still going. After 5 years, only a half of those new businesses are still going. After 10 years, a third, and after 15 years, only a quarter. So there's a lot of new businesses, particularly, that fail soon after they start. So a number of businesses that have failed recently on the high street. You might be aware of some of these. And also there are a number of new businesses, such as this one, a business class only airline, that have also failed. So in this video, we're going to look at the reasons for business failure, and we're going to break them down by a couple of categories. We're going to look at internal and external reasons, and also financial and non-financial reasons. Let's start off by looking at some of the internal causes of business failure. So reasons businesses fail that are due to what they've done themselves within the business. The first one is failing to understand the market. So if the business hasn't really understood what its customers are wanting, or hasn't done accurate market mapping, haven't found a gap in the market or researched their competition, then this may cause them difficulty and they're likely to fail. The second is poor planning. An inaccurate cash flow forecast or not planning enough resources to meet demand can result in the business failing. The third is poor decision making by the management team or not coming up with good enough ideas. The fourth one is bad organization, so not having enough stock when they need it, or not being efficient in the way in which the workforce work would be examples of being badly organized, and that can cause a lot of wastage and the business not to be able to compete and so fail. Overtrading. This is when the business tries to increase the size, and by doing so buys more and more stock, so they can sell more and more. Now, as they buy more and more stock, this will take more and more cash to do, and there is a risk of a serious cash flow problem if they've spent lots of money on stock trying to become larger, and actually they can't meet their short-term debts and go insolvent. The last reason is maybe that their idea wasn't very good in the first place. Now let's look at external causes of business failure. Our causes or reasons why a business might fail that wasn't to do with them themselves, but was something happening outside the business that affected them. So the first one might be the general state of the economy. The recession we've had between 2009 and 2012 would be a good example in which people started to spend less money, and this would have affected a business's revenues and cash flow, and so might have caused them to fail. The second is changing social trends. Maybe a normal high street shop has been suffering because people now buy more online, or they go to large out-of-town retailers. Third is changes in demographics, the makeup of the population. So as people become older and save more for their retirement, this may affect how much they spend on a particular type of business and might cause that business to struggle. Finally, we have the political environment, so decisions that politicians make, for example, raising tax rates, e.g. VAT, or maybe increasing corporation tax. This would have an impact on the business, and if what they do has a negative impact on the business, it may cause it to fail. Okay, so we've looked at internal and external reasons. Now we're going to break down and look at some financial and non-financial reasons. So why do established businesses fail? Well, generally speaking, we can class most of the reasons as being a financial reason or a non-financial reason? Let's look at the financial reasons first of all. So poor management of cash flow is one of the main reasons why businesses, particularly new businesses, fail. So this is a financial reason. Why might there be poor management of cash flow? Well, again, as we said, overtrading, increasing your stock levels significantly, tying all your cash up in stock means you might not have any cash left, you have a very low asset test ratio, and that could potentially lead to insolvency. Inadequate credit control, so maybe offering credit or taking on too much debt and not being able to pay it back. If you have allowed your customers a period of time to pay back their debts and those customers don't, and you have a bad debt that is owed to you, that can reduce your cash inflows and potentially cause you a cash flow problem and a risk of running out of cash. If your cash flow forecast hasn't been very accurate, maybe there is a cash flow problem lurking in the future that you haven't identified, and so your business might fail as a result. Failing to adequately plan for any large future expenditure, buying a new premises, buying a new important machine, can mean that you're short of cash, you don't have the cash maybe to make the investment, and so as a result your business struggles and may fail. Inadequate or inappropriate financing is our second financial reason why businesses fail. For example, if a business was to use a short-term overdraft to finance an investment or to build a new premises, this would be very inappropriate. Maxing out your overdraft and incurring a high rate of interest and having to pay back that money soon in a short term, that would not be an appropriate use of that money to use it for something that is going to take a long time to pay back or is a very large amount of spending. So that could cause the business financial difficulties, maybe not being able to pay back their overdraft and being declared insolvent. Not having enough shareholder capital in the business can contribute to cash flow problems. You need enough money within the business at the start, because otherwise you might have a lack of working capital, money that is set aside to deal with day-to-day spending and paying back short-term debts. Okay, now let's move on to some non-financial reasons. The first one is lack of management control. This is a non-financial reason. So not having a credible business plan, failing to understand the market or some of the details behind the market, failing to run the company properly, or maybe spending too much on a particular area, for example, marketing. These would be non-financial reasons why a business might fail. Another set of non-financial reasons might be external shocks. Maybe the loss of an important customer, maybe a sudden decline in demand due to something like a recession or a change in tastes, or maybe a change in the law that impacts on your demand or significantly increases your costs. These will be significant external shocks, not necessarily financial shocks, but again, might cause your business to fail. So, overall, we've looked at reasons why a business might fail, and we've broken them down between internal, external reasons, financial, and non-financial reasons.